All right, so let's go ahead and take a look at slide 42. I've printed off a copy, and this is an example. We have this company called Laird, and we're going to reconcile their bank statement. So I'm going to read part of this, and then I'm going to show you how we're going to do it. It says the bank statement for Laird Company shows a balance per bank of $15,907.45. So what I'm going to do, we've got a little bit of space here, not a lot, and I'm going to make a little column, makeshift column for bank. It says on this date the balance of cash per books, or the business, is 11,709.45. Okay, so I'm going to come over here and I'm going to give us some space, and I'm going to write book. So you always want to start with, ideally, with what the bank shows as a balance and what the company shows as a balance. Let's go ahead and do that. We've got 15,907.45 for the bank, and for the book we have 11,709.45. Okay, now we've got some items here. It says deposits in transit, April 30th deposit received by the bank or processed by the bank on May the 1st, $2,201.40. So we know that this is going to be a reconciling item, but which side does it go on? So we have to ask ourselves the question, which party, either the bank or the business, the book, did not know about this? Well, hopefully the book knows that they made a deposit. So this is actually going to be an adjusting item on the bank side for the full amount. And it's going to be a positive adjustment because they are deposits. Next item, it says outstanding check. We've got 1, 2, 3 of them by my count. But since they went ahead and totaled everything for us here, and they are all outstanding checks, there's no deposits in there, we are going to ask ourselves the same question. Who doesn't know? Is it the bank that doesn't know about these outstanding checks, or the business? Well, the business wrote them, so chances are it is the bank that doesn't know. So this is going to be an adjustment also on the bank side. However, this is going to be a negative adjustment. It's going to be a subtraction. Other deposits, it says unrecorded electronic receipt from customer on account on April the 9th, determined from the bank statement. So what that means is that the bank is aware. If they weren't aware, they couldn't have put it on the bank statement. So this is an addition, because it is a deposit, of $1,035, and that is going to go on the book side. Okay, now I'm kind of getting in my own way here, so you'll have to bear with me as I do this. It says other payments, unrecorded charges determined from the bank statement. Very important information here. Are as follows: a returned non-sufficient funds check on April the 29th for $425.60. So this $425.60 was deposited and recorded on the company's books, but now the bank was unable to collect that, so they have subtracted this amount from the bank account balance. So the bank knows, the book is just now finding out. So this is an adjustment per books for that amount, and it is a negative adjustment. $425.60 is what that says. Debit and credit card fees on April the 30th of $120. Well, their fees, that's an expense. Bank knows about them. They charged them. It's $120 subtraction. Bank service charges on April the 30th, $30, same story. $30 on the book side, and it is as subtraction. We have some additional information. It says company errors. Check number 443 was correctly written by Laird for $1,226. So they wrote it correctly and was correctly paid by the bank on April the 12th. However, it was recorded as $1,262 on Laird's books. So what has happened here is the company wrote the check correctly, the bank paid it correctly, but we have to figure out what the difference is between these two figures. And if we do that, we'll come up with $36. Now, the company has actually subtracted too much from their cash account by $36. So this is going to be a $36 addition to the book side. So now we have gone over all of the items that we have on the printout. So now we have to see what our final total is. So for the bank we have 15,907.45 right there, right? Plus 2201.40, okay, minus $5,904. And that equals $12,204.85. Okay, so I'm going to clear this out, and then we're going to go over here to the book side. We're going to start off with 11,709.45 plus $1,035 minus $425.60 minus $120 minus 30 plus 36 equals 12,204.85. Both figures match. So the correct balance at the end of the period, April, $12,204.85.